Welcome, traders. This is a quick review of the market conditions as it is, well, let's see, Wednesday, May 29th. We're coming close to the end of the month of May. Selling may go away. This year, the famed Stock Traders Almanac, as well as my own work, I always was famously quoted by Yale Hirsch, that's Jeff's father, who came out with the Stock Traders Almanac as selling may go away, but no one ever said it was the 1st of May. And that's exactly what the kind of condition that we have here in the marketplace. But what I want to go over is our trades that occurred in the room, number one, and I want to review a couple quick things for you as a day trader. So I have on your screen here, this is our crude oil, and we started off the morning with this trade right there, right out of the get-go. It was a really nice trade setup in crude oil. We've modified, or we don't like to call it modified, but we maintain our trading strategies. In other words, due to fluctuations in trading ranges, you go from small contracted ATRs, average true range, to expanded. Crude oil, it's exactly what it did about 4 weeks ago. When we went and rolled out of June into July, we started to see crude oil go from an ATR of about $1.10, meaning it only had about $1.10 range on average over a 10-day period of time. Every day, one day was $1.20, one day might be $1, so average it out, it's $1.10. All right. We expanded our risk-reward ratios to account for that increase in ATR, and now crude oil is up to about $1.75. So with that said, let's take a look at today's trade situation because it has a lot to do with confirming PPS buy signals with volume. Now, this is my proprietary volume indicator. Many of you are big fans of this, especially if you have the TradeStation Person VIP Lifetime Package. It is not available on any other package. It's not available on Thinkorswim. Thinkorswim, we have 3 dynamic indicators: PPS, Person's Pivots, and the PMC Relative Strength Indicator. Dynamic for stock, equity, option traders. And we'll get into a trade that we did with Tesla in just a few minutes. But what I wanted to point out to you is, why was this such a special trade? Because number one, what we look for, and I think all traders should look to spot, is convergence patterns. When we see secondary, this is a number 1 point, that's a number 2 point. So the number 2 area has made a lower low than the number 1 area, right? Corresponding, the volume here isn't really indicating that on balance volume, and that's what this tool is at the bottom. But if you notice, our volume tool has a more defined area of convergence, and you can see the momentum has turned positive. So by the time the buy signal comes, the momentum is already, look at this, here's your buy signal right there, already turned positive. It gets out on a quick scale out at the intended profit target, which is that blue line, and this is exactly what's shown in our live trading room each and every day. So that's the profit target, and it had a protective stop. So that red line is the protected stop. Then the market went right back into another buy signal right here. Now the momentum started to look improving. The momentum of the on-balance volume was starting to improve, so it looked great. It took a profit, nice. It scaled out and got stopped out on the balance, super nice. Then finally, here's what we wanted to talk about, because we spent a lot of time on this number 1, number 2, just the opposite of number 1, number 2. When you have markets that make newer lows and or markets that make newer highs, if the corresponding indicator, in this case my favorite tool for futures, is this volume tool. Now, this is a situation where on-balance volume did, and it's very rare because it doesn't work that much, but it's something you can use, but it does illustrate there was a weakening volume trend at that new high. So the system absolutely took a great trade. We covered this from the get-go, even before it triggered. We said, guys, heads up, volume divergence. If this thing generates a short, it'll more than likely go back to where the first long entry was. So that, number one, was really smart thinking. That's exactly what we covered in the live trading room. What did it do? Took the profit and then it did leave some money on the table. Not going to lie to you, because here's the profit target, there's the low. But if this thing trended and went down forever, that was our trailing stop mechanism. So we did get stopped out. So nice trade. Now crude oil has this huge run up. Why is the system flat? It's not in a trade, and crude oil continues to move up. Well, first and foremost, the settings don't take trades if each trade has a risk factor greater than, say, $400. Now, that's 40-cent move in crude oil. Now, a discretionary trader can take any trade they want, but let's face it, here's where the buy signal is initiated. Your stop goes underneath the swing low, let's call it, and that little move right there is that's about a $475 risk per one contract. Now, from a discretionary standpoint, this was a great setup. This was the same setup that we had here. But the difference is when you program an algo that say don't take every trade, filter out, only take trades that have X risk factor, you're going to miss trades like this. That's why it's important for discretionary traders to maybe use a combination of algo along with your insights in the market. Half the problem, though, is you don't get filled when you're discretionary trading, and the other half is you may freeze and say, I don't like that trade, and you're not going to get in it. Anyway, not every trade is going to be taken all the time, but today was what we call a hat trick, 3 winners in a row on crude oil in a dynamic day for us. So we're happy to see and take what the market gives us. Now, let's take a look at the equity markets, because today we started off a little bit rough, and we told everyone right before the open this probably not the right move to get in on the market here from a long perspective. The advanced decline was weakening. The trend was down. We had daily sell signal, and this was where we took the short position in the live trade room. We had a profit target, and wildly, same story. The momentum of the volume starts to increase. Now, this did get out of the trade. 2 things we talked about in the live trading room. If the market is to rebound and move higher, we want to see this, the advanced decline, turn more positive. And what we stated was that if we get over the 100 versus of the S&P 500, we were trading at 55, by the way. 55 stocks were higher on the day in all of the S&P 500. We wanted to see an increase in the advanced decline, and that tells you there's buying pressure coming into the market. It did. And I said if it happens, we should get a lift off to about, where we were at around 9 a.m. this morning, and that's exactly all the market did. Now we've got Mueller on TV. We got the, more of that kind of nonsense, but there's no real decisive action with China, and the market is taking a breather. But I want to point out to you, while we did take out this low, and we did take out that swing low, we have already hit an initial profit target in the marketplace. So I'm not sure how we're going to end up, but I also think that this sell in May, go away mantra is probably not going to work too well. And here's why. I'm seeing a little change of the guard in the markets. And first thing that I'm seeing is energy. Let's take a look at some of the energy stocks. I want to focus in on this bright blue stuff. That's the relative strength. That's the PMC indicator, and you can find that on Thinkorswim. So for that, let's take a look at Thinkorswim, because I definitely want to go over a couple trades here that we were looking at in the live trade room. So let's go over to our charts and let's punch up, let's see, first and foremost, what do we want to look at? Let's go with Hess, okay? So I'm going to expand Hess up, maximize that, and here we have our relative strength. That's the person market catcher, on balance volume, person's pivots, all lined up with everything that we want. Let's take a look at the daily chart. All right, so Hess has, as it was making new highs, it sold off. The relative strength versus the overall market was weak. It's still weak, and volume is weak, and it's still weak. What we want to do, if we're going to get back into the long side of any trade, we want the relative strength to start to improve. We want PMC to start getting more like fuchsia and then turn bright blue, just like it did back here. Let's look exactly at what I'm referring to right here. We want to see this type of action where we get a PPS buy arrow, we get relative strength improving, and again, volume, if I bring that into picture with the on-balance volume, that is your pitch perfect trade. Look how the stars lined up. The relative strength is improving. There's volume coming into the market. You got a buy setup. Now here's a dead giveaway. Using person's pivots, and that's what you see on your screen. These pink dots, the purple lines, and the blue lines. Those are pivots. Those are the person's pivot indicator. It says so right there. There's your person's monthly, weekly, and daily. So when I start to see a flip of prices getting above short-term pivots and the short-term pivots getting above higher time frame pivots, that tells me mathematically the weight of closes is starting to appreciate, and appreciation of closes attracts money into the market. So therefore, we do not have that right now, and that's what I would be watchful for when I start to make selections of buying stocks. Now, let's take a look at Tesla. As I promised in the beginning of the video, I said we'd take a look at Tesla. Tesla's gotten its butt kicked. Whether you think it's going to $10, whether you think it's going to $5,000, I don't care where you are with Tesla. As a stock, I'm looking at this from the perspective that A, it's had a hell of a trend. And even in this book, by the way, this book written, 15 years ago. Let's see if I can crack open the pages. We are in the, we're under pressure to finish the second edition out. It's overdue by a few years, but notice here, trend consolidation. We're either going to resume the trend or reverse the trend. Well, here's the story. We normally go from a strong trend to what? A consolidation. So I'm starting to see evidence that the relative strength is just basing out, number one. I'm starting to say it may not go up, but it may go into a higher probability of a pause, a couple week pause. And that's why we looked at today, if we punch up Tesla, TSLA, look at a couple things on Tesla. June 21st, you'll notice that the we have a implied volatility is 74%. Look at the 52-week implied is 110, and the historic is 109. So it's damn close to the upper end of a high IV market. So what does that mean? That means that it's better, it's more conducive to sell premium, to take in premium. And here's what I think, and this is what we talked about: an Iron Condor, a short Condor, 175, 170, and then 205, 210, and collect $2.70 for that strategy. Because I think that with the June 21st expiration, think of it, it's Wednesday, it's May 29th, it's the end of the month. I don't think the stock is going to crash anymore. I don't think the stock's going to rally a whole lot. And especially if it does, it probably won't do it Wednesday, Thursday, Friday, and we guaranteed aren't going to do it Saturday and Sunday. So for an option strategist, if you're selling premium and you got an option that has 21 days to expiration and you lose 5 days, guess what? You've lost 25% of the time value on that, haven't you? So what does that mean? Theta. If the stock does nothing, we're going to take a collapse in time premium, and that's what we want. We don't want the stock to rally. We don't want the stock to drop. We want it to stay within that zone, and that's why we want to look for the category of a high implied volatility environment. We want stock premiums or the options on that stock to be higher, number one. We want the condition of the market that's been in a trend. We don't want to see a V bottom. We just want to see consolidation, and that's what I think we got going on. Why would I think that? Well, for one, look what Tesla's doing. The stock market, the S&Ps are down hard, the NASDAQ is down 62 points, and Tesla is down 26 cents. Relative to the overall market, and that's what the PMC is showing you here, it is outperforming. It doesn't mean that the stock's getting ready to rally. It just means that it's not falling. So therefore, at the very least, we can put together a plan of selling put premiums below, and if we think the market will still stay contained below these pivot lines, then maybe sell some upside premium. And at the very least, choose the month of expiration that you tend to be able to lose a lot of time. And 25% on an option. Too little time, you don't get premium. Too much time, you've got too much time on your hands, right? So the sweet spot is looking for that theta decay over the next 5 days, and that's where we came up with the June option strategy. I hope you enjoyed what we've been doing in our live trading room, and more importantly, at least sharing with you what we're looking at in the market and how our minds work using technical indicators such as we've created. Thanks again for watching, and we'll update you as more market transitions and the market progresses. Thanks again, guys.